How's it going, everybody? KCG Trades here, and today I want to talk about Apple stock, ticker symbol AAPL. I'm sure you guys heard a lot about Apple recently, and on July 30th, when they released their earnings report, they also confirmed a 4-to-1 stock split effective August 24th, if I'm not mistaken. So in this video, I want to give you guys some information on what a stock split actually is, what it means for Apple specifically, and if you should buy Apple for a long-term hold, if you should do it before or after, and I'll be looking at that through their fundamentals with their earnings report and their technicals via their chart. Okay, so I'll be talking about all that in this video. And a quick disclaimer, I am not a financial advisor. Everything said is strictly my opinion and my opinion only. Please do your own due diligence before making any financial decisions, okay? So let's just get right into it. First off, what is a stock split? So a stock split is basically when the big boys and a publicly traded company divides its existing shares into multiple shares to boost the liquidity of the stock. Basically, to make it more accessible and easier for people to buy and sell. Companies choose to split their shares because they believe the price may be too high, so they split it to lower it so more investors are comfortable buying it. Ask yourself, would you rather buy 20 shares in a $50 stock or 5 shares in a $200 stock? Not everyone, but most people would say 20 shares in a $50 stock, which is the logic behind Apple's splitting of the shares. To make this as clear as possible, when a company announces a stock split, the share price gets divided while the amount of shares gets multiplied. So nothing changes, it just gets rebalanced. Okay, so for example, if you owned 10 shares of XYZ stock at $100, this will cost you $1,000, as 10 times 100 is 1,000. And they split their $100 stock 2-to-1. So the company price would divide by 2 to make 100 to make it to 50, but your shares would actually double from 10 to 20. So it would still cost you $1,000. You would just have more shares and the share price would just lower. All right, so I want to make things super clear. This changes absolutely nothing with the stock. The market cap, the valuation, the fundamentals all stay the exact same. And the only thing that really changes is the number of outstanding shares and a decrease in stock price, as mentioned. So you're probably wondering, how does this apply to Apple? All right, so as mentioned, they recently announced a 4-to-1 stock split effective August 24th on their July 30th earnings report. So if the share price closes at $400 on August 24th, it will divide by 4 and become $100. And every share that you own will get multiplied by 4. So one share will become 4 shares. So the board of directors in Apple believed the price of Apple was a little too high, so they agreed to do a stock split on the company. They agreed to do a 4-to-1 stock split. Now, it doesn't always have to be a 4-to-1. For instance, Apple has split their stock 4 times since IPO. They did 2-for-1s in 1987, 2000, and 2005, and they actually did a 7-for-1 in 2014. So it really depends on what the company is trying to accomplish. So you're probably wondering, what does this even mean? Like, is this good news? Is this bad news? And really, in regards to Apple, it really doesn't change anything with the overall aspect of the company. This move is strictly cosmetic, and Apple was quoted saying they decided to split their stock to make shares more appealing to a broader base of investors. So they just want to look out for the common investor and want them to have access to buying Apple stock. Okay. But because of this split, there is a potential for increased demand of the stock. Like I said, the cheaper it is, more people would want to buy Apple since it's a globally recognized name. All right, and because of this, it could potentially have a positive effect on the stock price because of the additional perceived value. There should be a word value there. I do apologize. So now you're probably wondering, okay, I get this, I understand this. Now should I buy Apple? Is Apple a buy? So in regards to Apple, this is something that Jim Cramer always says: own it, don't trade it. Okay, Apple is something you should buy and hold for the long term. You should have it in your portfolio for over 5 to 10 years. Don't even look at it. Um, yeah, don't don't trade it. Just own it. I don't trust much things Jim Cramer says, but in this aspect of Apple, he is correct. Own it. Don't trade it. They are consistently growing. They have tons of cash, and Apple actually had a record June quarter. The CEO, Tim Cook, said Apple's record June quarter was driven by double-digit growth in both products and services and growth in each of our geographic segments. So what that basically means is they're growing all over the world, not just in certain areas, which is really, really good news, okay? So let's just quickly take a look at their recent earnings report and look at the chart. Okay, perfect. So we have Apple's recent earnings report here. And if we just take a look at their 3 months ended, this is actually spectacular numbers. So net sales grew. We see total net sales grew. Their margins are fantastic, meaning the amount they are spending is significantly lower than the amount they are making. If we take a look here, net income is consistently growing. Their earnings per share is growing. And in regards to the geographic segments, if we see here net sales by a reportable segment, America is growing, Europe is growing, Greater China is growing, Japan is growing, rest of Asia Pacific is growing, total net sales is growing. So everywhere they're putting their money in, they're getting returns, which is amazing to see, especially the fact that we are in a pandemic right now, and a lot of Apple stores were actually closed. The fact that they are growing is outstanding. All right, so in net sales as well, if we see here, iPhone actually grew, which is crazy because Apple didn't release an iPhone this quarter, this past 3 months. Mac grew, so iPhone actually grew 1.7%, which is not amazing, but is actually pretty impressive to the fact they didn't release a new iPhone. Mac grew 21%, iPad grew 31%, which is outstanding because I know a lot of people are getting back into iPads. Wearables like AirPods grew 16%, and services are up 14%. So these are quite amazing numbers. If we take a look quickly at the balance sheet, we know, like I said in my last video, Apple has about billion, in cash. And in regards to the overall statement, you guys could take a look at this yourselves. I'm not going to go through everything. These are just fascinating numbers, and is the reason why Apple continuously keeps going up. Okay, so Apple has the numbers to back it up. A lot of people say tech is in a bubble because of the Fed, the QE infinity, all that stuff. In a way, it does make sense where like Fed is the pumping money into the markets, but there's a reason certain stocks are going up, like Apple. They have the revenues, they have the earnings to back it up, as well as they're an amazing company. Okay, so I wouldn't say they're in a bubble. They might be a bit overvalued at these points, but they have the numbers to back it up. Okay, they have the numbers to back it up, which is the most important thing, and is the reason why monster stocks like these go up for the long term, because of the numbers. As soon as we see Apple start to decrease or lower year over year, then we'd want to raise caution. But as of now, they are still growing and they are still strong. Okay, so these are very good things. And in the fundamental aspect, Apple is a buy, is a long-term buy. Okay, perfect. So I have Apple's chart pulled up here, and we're going to do some technical analysis on whether or not Apple would be a buy. So taking a look at the 5-year 1 week chart, so that means one candle is 1 week. We have been on a consistent uptrend. We do see here we've had some big pullbacks due to market corrections or just the stock correcting itself. And this one was due to the pandemic, but we always see that Apple has always recovered strongly, which is great news. Okay, it's something we want to see with a long-term stock. History of a long-term uptrend. Okay, so it could continue. So looking at the 1 year, 1 day chart, it means one candle is 1 day. We do see here Apple has been on a consistent uptrend, like I said, and recently gapped up on earnings, as well as the announcement of their stock split into the 400s, which is now their all-time highs. All right, so it is a bit overextended from their moving averages, okay? And when we want to buy stocks, we want them to be near the moving averages, and preferably when they do a little pullback to to the lower moving averages, okay? We always want these moving averages to be in unison, all moving up together. And when the stock pulls back and finds support off one of these moving averages, that is a good time to buy. Okay, so we see here Apple has been on a consistent uptrend, pull back, use this as a support, uptrend, pull back, use this as a support, uptrend, pull back, use this as a support, uptrend, pull back, use this as a support. So there's always support, we have to find it, and that's the best time to buy. Okay, so now we see here, since the stock is a little bit too extended from these moving averages, these lines here, we suspect that Apple will consolidate for a bit until the moving averages catch up with the price, or the price itself will pull back until it finds support at the moving averages. As you see, it always finds support at the moving averages, and times where it goes below the moving averages and don't find support are the times you want to be selling, and the times when it moves back above the moving averages and finds support again is the time you want to be buying. Okay, it's very simple, and a lot of people make this very hard, but it's really not. I'm not saying it's easy to buy and sell at certain times, because obviously emotions and risk management come into play, but from a theoretical standpoint, that is what you should be doing: buying above the moving averages, selling below it. Very simple, just to keep it as simple as possible so you don't get too confused. And yeah, so what I would want for Apple is to consolidate a bit till the moving averages catch up, pull back to the moving averages, so we could initiate a new position. So just to go back to what I was saying, long-term hold, short-term wait. Okay, if you own it, hold it. It is a long-term play. Just let that grow in your account. Don't even look at it. Like I said, the dividend continues to grow. There's really no reason to sell. If you don't own it yet, like I said in the technicals, wait for a pullback, wait for it to consolidate. Don't chase, okay? It has gone up a little too fast too soon, so we want it to just rest a little bit, because like Adam Koo says, stocks breathe in and breathe out. They breathe in, they breathe out. So nothing goes straight up and nothing goes straight down. Okay, so as stocks are going up, just wait till it comes down a bit to buy it back. You can wait until after the stock split if you're not in it already, because I do suspect that once the stock split happens, we will have a little sell-off, so people will take their profits. That's just my assumption. I could be completely wrong, but you could wait. There's no rush to get in. You could wait. And like I said, definitely one you should have in your long-term portfolio. So that's basically it. I do hope this video helped you out a bit. If you have any questions or concerns, please leave them in the comments down below. Like, share with your friends and family. Thank you very much for watching. Have a wonderful day.